Welcome to Taking Stock. I'm Amanda Lang. Coming up on the show, are governments secretly happy to see inflation boosting their tax revenue? And a look at some of the hard decisions facing Canadian business. Plus, from snarled supply chains to clogged airports, hard problems we are not tackling very well. That is all ahead. First, though, for the week that was in business, it's time for the briefs. There was something of a warning from Canada's biggest bank this week. Amid strong profit growth, RBC's CEO said the bank sees the risk of recession in the months ahead at 50-50. Dave Mackay said a cooling housing market could slow the economy. The big banks all continue to show solid performance, but with interest rates set to rise again next week, have their eye on the potential for consumer and business loan slowdowns ahead, but aren't worried about those loans turning sour. One sign that higher prices may be taking a bite out of consumer behavior, retail sales were flat in March at $60 billion. That surprised economists. In fact, when inflation is factored in, retail sales fell in the month. The biggest decline was in auto sales, both new and used, while prices increases saw a slight jump in grocery and gasoline sales. Nearly half of Canadians in a recent survey reported finding it hard to keep up with soaring food costs. The Angus Reid survey had 49% of people finding it difficult or very difficult to feed their families. That compares with 36% in 2019. Meanwhile, more than a third surveyed said they were worse off now than a year ago. And the outlook is not great either. An almost equal number expect their finances to worsen in the year ahead. The deadly weather last weekend also kept people in Ontario and Quebec without power into this week, as hydro infrastructure damaged in the storm had yet to be repaired. Those repairs in some places could take weeks. Experts warn that these extreme weather events will become more and more common in the years ahead, thanks to climate change. It took only minutes for Quebec's provincial government to pass into law a controversial bill aimed at beefing up protection of the French language in Quebec. The many and vocal critics of Bill 96 have argued that it oversteps its aim and undermines the rights of English speakers in the province, as well as the protection of Indigenous languages. Businesses will face cumbersome new rules, something business leaders have warned will have dire consequences for the economy, as many simply close or move. And those are your business briefs. Softer retail sales, a worried consumer, and now a major bank CEO flagging recession risk. It all adds up to cause for concern, potentially, about the Canadian economy. But is it a pothole or a major drop-off? Job vacancies in Canada remain at record levels. That argues that business is still going strong. Ben Tal is Deputy Chief Economist at CIBC. Benjamin, great to have you with us.
A pleasure. Thank you.
So I want to start with that kind of state of the consumer that we see in the retail sales data. It was softer than some had expected, but maybe I guess I would say not surprising given what's happening with pricing. What do you make of sort of the confidence level and what it says about how we're feeling and spending?
Yes, that's a good question. The consumer is a bit confused. You have your job, the job is secured. In fact, we don't have enough workers. At the same time, inflation is rising. People are talking about a recession, and your mortgage payments are rising like there is no tomorrow. So you feel confused, and we see it in the retail sales numbers. They were not bad. They were actually better than I expected, but at the same time, they are not in the sky. This consumer is starting to be more careful about purchasing, and part of it is really the confidence. Part of it is simply the goods are not there. A significant portion of the decline that we saw this month was cars. And it's not demand. People want cars. We simply don't have them because of the supply chain story. So it's a mixed bag here.
Yeah, so it's so interesting, right, that we are seeing some of just we still want the stuff, we can't get our hands on it. One other piece of this, of course, was during pandemic, many households in Canada, Benjamin, built up their savings. You know, we talked about that many times, the billions of dollars of extra money. Is that cushioning the blow of higher prices? Are we spending now because we have this excess amount to kind of dole out gradually?
First of all, one thing that is helping is spending on clothing that are actually going up. Why? Because we are going back to the office and you really want to look good. So we spend a lot of money on clothing, which is interesting, this month and next month. Beyond that, absolutely right. We have this mountain of cash, and we are starting to see this cash going down, which means that people are starting to use it. In addition, something very interesting is happening. Wages are rising, but the lower your wages, the higher your wage inflation is. The lower wage people are getting the higher increase in their wages because they are in demand. We don't have enough of them, so their wages are rising, and that's helping this segment of the population actually to deal with inflation. So yes, there are some factors that are easing the pressure when it comes to consumer spending.
So one interesting aspect of this that we've alluded to here is that there is full employment, right? We have a very low unemployment rate. There's all of these vacant positions. Companies say they want to fill them and they can't. Have we ever before, Benjamin, seen a situation where a recession could come? Everybody acknowledges. We just heard a big bank CEO saying it's 50-50, and yet we have full employment. It seems like an odd combination.
Yes, but full employment can go down very significantly, very quickly when you have a recession. And the risk is, quite frankly, that interest rates will be rising way too quickly and will create a recession. We have seen it before. So the risk of the Bank of Canada or the Fed moving too quickly is a real risk that can lead to a significant slowdown. And that's something that we should avoid. But yes, this kind of situation, when people are uncertain, companies are uncertain, they are not investing, they are not hiring, that can change very quickly. Therefore, what the Bank of Canada and the Fed are facing now is a very delicate situation in which you have to raise interest rates, but don't kill the economy.
We are, of course, looking for the bank to move as soon as next week again. Are you worried that the bank will get it wrong? There is, of course, growing criticism that the bank has put us in this position and needs to get us out of it properly. Will the bank go too far and raise rates too much and maybe cause a recession?
So we know that come June, they will raise by 50 basis points. The next move in July will be another 50 basis points. They want to get to 2.5%. We are at 1 now. 2.5% very quickly, and they will, overnight, economically speaking. Now, they believe at this point that 2.5 will be sufficient. But show me the central bank that will stop raising interest rates if inflation in the summer will still be 7-8%. They will not. You never know that you overshoot, only in retrospect. And that's the risk that we are facing. So I will put a probability of a 30% probability that the Bank of Canada will overshoot, but we still believe that given the balance of probabilities, that this central bank will stop where it should stop, which is around 2.5%. And that will slow the economy without taking it into a recession. Let's hope and pray.
We hope you're right. Benjamin, always good to have you with us.
A pleasure. Thank you.
Benjamin Tal, Deputy Chief Economist at CIBC. Coming up, governments say they want to help with inflation, so why don't they? We'll take a closer look next.